weekend all. Ira Epstein of Linn Associates with your weekend edition of your financial market update for Friday, June 21st, 2019, just after 4 p.m. and this year's settlement. And you know, had you looked at these markets an hour and a half, 2 hours ago, they were trying to hold up, not down on the day, but at the end of the day, the selling finally came in. Gold held up actually pretty well. But Fridays have been pretty disastrous for gold for a long time. It started changing about a week ago, and it's been following through with Fridays not being that bad. But you can see how gold's still gaining on the silver. The copper market's still grinding away. Now, there's a lot going on. We had a Fed change of policy, but yet the day after, 2 days after, because that was Wednesday, you're starting to get the market saying, oh, okay, maybe we got ahead of ourselves. We got down under 2% in the 10-year notes. You know that the gold soared as Iran did shoot down a U.S. drone. The president supposedly was 10 minutes away from launching an attack, where as much as the military had said they thought maybe the casualties would be 150 people, and the president decided restraint was the proper order of the day. Nobody had been killed. The drone was shot down, and there wasn't another U.S. plane right in that vicinity carrying troops. So the Iranians chose carefully. A message from them, very clear. Now we also have India sending its ships to the Straits of Hormuz properly to escort the oil going to them. China, where are you? You got a huge navy. Put it there. Start protecting your oil. And I think Japan should do it. The whole thing should not fall on the U.S. We don't get oil from the Straits anymore. Our oil is home brewed. We're the biggest producer in the world, yet there we are fighting the battle. Join us. Maybe Iran will back off and say doesn't want to hurt potential customers, because while this embargo's on now, there'll be a point in time it probably won't be. As for the dollar index, the Fed came in this week, and you know what they did. They got rid of the word patient. They put the fear that trade issues are causing the markets to suddenly take a change. They see some risk to the downside. Certain Fed members are now split. Someone cuts right away. So the market's trying to figure what next. And then you've got G20 coming up this week. So it's so much that I could spend an hour on this just talking about all that. But suffice to say, energy prices basically up. Why? Where do you get the supply if it's not from the U.S.? So that got its bid. Let's take a look at what we have. If you take a look at a closing basis, the market just missed an all-time high close. It made all-time highs, not an all-time high close. So what? You're back up right into the resistance area, and it's been a heck of a performance for traders. I am, of course, concerned that are people chasing just to chase, that they feel left behind. I'm always concerned when I hear a Fed start warning about the economy and everybody's buying stocks. It just gets me nervous. You've come down, back up. You can see where you're at on a weekly area chart of closes. On a weekly bar chart, you came down, back up. Now, if we look at this week's high, we got as high as 29.60. I had, as you know, a retina operation yesterday. And I had a torn retina, and they go in and they weld it. They call it laser, but it's welding. My eyesight's still a little bit off, but it's a heck of a lot better than it was. And you can see the high here was 29.6125. So any way you want to cut it, by definition, are you going to take out that high, or are we going to look back and say the market made a double top? I don't know. I just know the market's got a big thrust to the upside. The pattern on the weekly chart is a lower low and a higher high. It's thrusted, but it hasn't given you, like it did back here, the patterns of higher and lows, higher highs. You haven't had a correction. You really haven't had a correction, frankly, from 27.28, let's call it, all the way up to 29.60. If you look at this, each week's got higher lows. When we take a look at where the support was, the 100-day average had held here. You made a run at it. You missed it by, I'll still say, quite a bit here. Then you came back up. You stalled against the 18-week average. You stalled again right here. And then you had the news to launch the market with the Fed this week and other issues that are going on. Where's the resistance if the support's the 18 and the 100-week average and the 200's way down here? Why, it's the upper Bollinger Band, which is 29.82. So get there, and I still say the pros will take some money off the table. Of course, the wild card's going to be G20. How do you play that? And that's up to you. In terms of momentum, momentum is up. In the slow stochastics on the weekly edition charts, I only look, are they pointing up, sideways, or down? I don't consider them overbought or oversold on the weekly charts. So what I have is a market that has gotten lower and low, higher high, fought a battle at the 18-week average, has managed to get up, could hit that next resistance at all-time highs at 29.82 with support back, as I'd look for it, in that 28.60 zone where that 18-week average is. As we come to the NASDAQ, it's a similar picture. You have this new high, you come down, you didn't make it to the Bollinger Band of the 100-week average, you've shot back up. Momentum's up, bias up, but you're not trending, and in this market, you're not anywhere near that old high just yet. When we come to the Dow made its high. So now you've got the higher high, but you're in a resistance area that you've been at before. You held two numbers of support that we pointed out 2 weeks ago, the Bollinger Band and the 100-week average. You've shot up, but you don't have the pattern. On the way down, at least you had lower highs, lower lows into this for places to cover. Rather, you've got momentum up and bias up, and you're just shooting one way or the other in the charts. It's always difficult. When you're at the Russell's got a higher high, lower low, and it's fighting at the 100-week average, right here at 15, let's call it 1550 to 1553, the 18-week average, and you settled at 1554 and a half. So you're right there. The market's in the area that it's got to make a decision what to do next. Should this chart take out this week's lows, I will argue that you'd have lower highs, lower lows, which is bearish. You'd be, at that moment at least, under the 18 and the 100-week average, which is bearish. And what you would not want to see is suddenly this 18-week get back under that 100-week, with prices under it. That could be a bad sign. Not saying it'll happen. I'm always looking ahead for what the market might do. In the VIX, you've been in a downtrend, which matches what the stock market's been doing, but it's suddenly stalled and found support. It's got lower highs, lower lows, but take a look. The settlement today is 1540. Your 1457 is the 18-week average of closes. The 100-week is 1483. You're under both, so you're still in a downtrend, and if the market were to follow through, it could go to 1090. On the other hand, take out this week's high of 1603, and you suddenly are over both those numbers and neutralizing the downside. So that might be an indicator as to what the stocks are going to do next. In the 10-year note, need I tell you, interest rates have taken all the pros. Do you remember December when we were looking for 3.5 to 3.75 interest rate on the 10-year? What about when it went to this week to 199 and a fraction? So I don't know too many people that are right. I can tell you that in this area, a lot of the people that thought that I respect thought the market had run its course. It proved them wrong, and it could still do it. There's a lot of people talking 175 this year on the 10-year note. Now think of what that does for mortgages and other parts, but there's a reason it's down there, is the economy weakening on us. You still have the pattern of higher lows, higher highs. You did manage to close over, as you can see it right here. Well, I used the word wrong. You closed at 127.16 and a half, and if you take a look, you're finishing up here at what? Just under the upper Bollinger Band. So you're up, over it, back, and back under it. It's still a very bullish scenario. Same in TLT. Bullish scenario, momentum still up, bias up, you're over the 18-week average. You get up to the Bollinger Band, you come back down, you correct, but the market has just been on a tear to the upside. Take out this low back here, last week's low at 130.30. I won't be anywhere near as bullish as this chart looks right now. I would then say you're probably in a corrective mode. In the dollar index, trend is down, bias is down. Momentum is down. You hit the lower Bollinger Band, found support this week, Probably some shorts taking some money off the table. Now, eventually, to come out of all this sideways action, you're going to have to break away from the Bollinger Band, get under it, or get back over it if you're in a new uptrend. Right now, the trend is down, and if this gives ground, the 100-week average could be an eventual support, 94.14.5 right now. In the eurocurrency, flip the mirror around. You've got higher lows, higher highs at the upper Bollinger Band, momentum pointing up. So these two markets went to extremes in the other direction on each other, but we have a top in the dollar, a bottom in the euro on the weekly charts at this point. In the peso, you've got a pattern of lower highs, lower lows. Now, the market's fighting a battle here looking for direction. I'm thinking that if and when it gets over this high that it made a week ago, it's over all the resistance at 52.34, and that could set up an eventual test getting back to the 53.05 level. In the meantime, the market's just meandering around in what I'm going to call on the weekly chart, a downtrend, downside bias, momentum pretty flat though. In the Canadian dollar, it's the flip-flop. So I don't know if this has anything to do with trade or the internals of these countries. You would think if it's trade, the peso and the Canadian would be going together because we're trying to put together our old NAFTA deal and get our new Mexican-U.S.-Canadian deal together. But higher lows, higher highs, you hit the resistance area. The bias is up, trend is up. That's all you've done. You're still in very much sideways action. So I want to repeat again. To come out of these sideways action, it's necessary to break out of Bollinger Bands eventually. We'll wait and see if it begins. In the end, this is people running to the end because of the Iranian situation, the fear of trade wars, and just seeing the U.S. suddenly weaken a little bit. That's done it. You're up and over, well over the upper Bollinger Band. Momentum as defined by being over the 18-day average, you're there. Bias, well, that's actually bias. Momentum up, bias up. And notice how these moving averages touched each other, the 100 and the 18-week, and now they're back to the upside. Again, I only look for markets to stay over a Bollinger Band 5% of the time. So I don't know that this market's got those legs. In Bitcoin, the market was up for the week a whopping $1,540, closed just shy of the 10,000 mark. It's been in a longer-term uptrend. We've talked about that on our weekly charts for a long time. And now the question is, because you're running at that upper Bollinger Band, you don't stay over it very long. You pull back. You can get a correction, but this market's made its note. Now the question is, how does it look at the new Libra coin that Facebook wants to put out? Is that a plus or a minus? Because if the government doesn't want it to come out, and Maxine Waters already has said that she doesn't want this, now we have to find out what that does. Is that going to be, if she doesn't get her way, is that positive? The one thing it's done, cryptocurrencies are getting more recognition, and they've certainly gone up dramatically in price if you look at Bitcoin. In the Brent crude, look at how the spread differential from nearly $11 has gone to $7.77. So what it means is U.S. oil has narrowed the bridge between Brent and that oil. Remember, our oil doesn't go through the straits and so on, so it's a little different. We're the world's largest oil producer as well. You've got a pattern of lower highs, lower lows. You held the Bollinger Band. I will look for resistance in a downtrend to come in between 67.20, the 100-week average, and the 18-week at 6,800, let's call it. In WTI crude, I'm going to look for the resistance at 57.98. Actually, it's going to be closer to 59.08. I gave you the wrong number there, which is the 18-week average to the green 100-week. So let's call it the $60, $59, $60 range there, and probably the $67, $68 range in the Brent. In gasoline, huge refinery fire in Philadelphia, and that set, besides fear of what's going to happen with energy prices in Iran and what's going on there, the market sharply higher. The refinery there consumes about 335,000 barrels of oil a day. I do not know how bad the damage is at this point. It was still on fire when I last looked. In the heating oil, we've got a pattern of a higher high, lower low. You couldn't get through the upper Bollinger Band. You did on the bottom, and you didn't stay there very long. I'm still going to look to see how resistance looks at the 100-week average and the 18-week average, which are right in the 198.70s. So you put it all together, wow, what a week. And I had a good time in the mornings trying to explain this to people and doing my morning video. Because what I do is I get up 4:35 in the morning, I read, I watch TV, I catch up with what Asia's done, what's going on in Europe, and how it's affecting the markets. Somewhere between typically 5:30 in the morning and 6:15, I start a recording, and it looks just like that, the black screen. I'm hoping you're having a cup of coffee, and now you start working with me, and we're going to go through the markets in this exact sequence. 40 futures charts, typically 3 to 5 ETFs. You'll be able to take your cursor and move it on the bottom. It'll tell you what section you're in, or there'll be a list on the side, by the way, where you just click it and you're right into the section that you want to go to, and you can jump section to section, whatever you want. The difference in this video, this one you're looking at here, and the ones you're seeing, I talk general here. I have to. The government says that if you're doing something for the general public and you're a registered broker, there are rules you follow, and I appreciate them and I follow them. I'm able, in my subscriber video, to say, buy here, sell there. Here's what I want you to do. Here's what I think and the reasons you should do it. Act, don't act. The idea there is you maybe have your own idea already, or you're looking for one, or you're just searching around and you're saying, you know, what does he think compared to what I think? That's the idea. Mentoring. Giving you an idea what to do with it. And this has in a big way been replacing my weekly or monthly webinars that I did, because I'm able to do these every day and really answer questions. People write me emails. I answer them right back. So the price for it, 26.5 cents a day to get you going, to see if you like it. If you don't like it, just stop. It's that simple. If you like it, you can either go month to month, and it's really 30-day period to 30-day period. Doesn't matter the day of the month you begin, it's 30 days. $15. You can do it for a year for then the equivalent of $156, which is $13 every 30 days if you break it out that way. To find out more and answer your questions, I've created a fact sheet and everything else you want on it, a small video to talk about it. Go to our website under Research or Education. It's right there for you. You can click right up here if you want as well. This will be an icon that'll take you right to the page you need. I'm Ira Epstein. You have a great day, and I will see you all come Monday.